Hello everyone, I'm Kunal Sodhani from Global Trading Center, Shinhan Bank, India, and we are here again with another episode of decoding and understanding the domestic as well as global factors and breaking down into several currency pairs and our analysis on it. So first, talking about the domestic side, we have been seeing quite volatile equity markets where we have seen a sharp bounce in the Nifty, Bank Nifty levels moving towards the right after the strong BJP being elected by the public. So I think the FPI flows were seen back in last couple of sessions, and if we talk about in November, now the outflows are to the tune of 12,000 crores only. While if we talk about debt, there is inflows of around 1,200 crores, or you can say flattish inflows on the debt front at least. But how much sustainability we will have in terms of flows is obviously questionable, considering the geopolitical risk, which still continues in the Middle East as well as from the Ukraine, Russia side. So I think any feeds from there definitely creates a lot of volatility and impact and nervousness into the market. If we talk about the US Fed, we have seen the Fed minutes. They still are pointing towards rate cut for the month of December. As well as if we talk about the US data points, we have seen the jobless data, or you can say the employment data remains quite strong. Even if we talk about the GDP number, it's in sync with the expectations for the Q3 numbers. While core PCE number was also in line, so of around 2.8%. So I think somewhere the data points are also suggesting that we may see one rate cut at least for the month of December 2024 by quarter basis point more. But going ahead, once Trump comes into picture in January, where if we are considering that the propaganda remained of lowering taxes as well as of imposing tariffs on countries like China, Mexico, Canada, and maybe any many others to add on, even the Europe, certain countries have been a bit fearful with respect to those tariffs because it can have an impact on their growth. So if this continues or if this side continues, more of fiscal spending will be seen into the market, which means the inflationary pressure once again will start building, and the rate cut trajectory may not be as strong as which was anticipated earlier. So I think January will remain a crucial month to have a fresh trajectory outlook on how the rates would behave. But for the month of December, we at least eye one rate cut, that is a quarter basis point by the Fed. Overall, if we talk about dollar rupee pair, we have seen dollar rupee moving towards 84.20 levels also. And then again, we have seen a spike towards it near 84 half levels. The paradox was when dollar index did cross around 108, where dollar rupee was lower, which means rupee appreciated when dollar index moved towards 108. While now when the dollar index have cooled off towards 106, we started depreciating again. So I think it clearly indicates, how rupee has been, managed to some extent, and it does not directly correlate with respect to oil or dollar index or maybe Chinese yuan. Flows remain an important part, and the intervention into the market remains quite more watchful, considering the liquidity is not that deep when we talk about dollar rupee. Our view for dollar rupee pair continues to remain with 84.15 to 20 zone acting as a strong support at this point in time. Slow, steady depreciation might be seen, but 84.55 acts as the first immediate resistance, followed by 84.70. So that's all from my side, friends. Thank you so much for your time and happy week ahead. Thank you.